Hey guys, and welcome to today's daily premium newsletter for March 14th. So the market took another nosedive today as thin volume compounded by a reaction to the news that Google will be banning cryptocurrency related ads starting in June weighed in on a already depressed market. A similar sell-off occurred on January 30th when Facebook announced that it would be banning cryptocurrency related ads on its platform. We still stand by our original hypothesis at the time. Facebook made the move because on the surface it claimed it wanted to protect its users from cryptocurrency scams like BitConnect, but secretly it was doing so to clear the way for its own cryptocurrency to be introduced on the platform. So Google will likely be also dabbling in their own cryptocurrency efforts, being one of the tech giants of the world. After all, Google is known for being on the bleeding edge of the tech space or acquiring the companies that are. Likely we'll see a coin offering of some kind in the next few years from the Googlers, but in the short term we think this is positive for the space. After all, many cryptocurrency scam websites have been known to outrank the legitimate ones on searches, and if there's ads, it makes it that much more dangerous an environment for someone who doesn't know any better. We have learned that reputable companies in the space that have proper documentation of running an honest business can go through the certification process they're working on. So it's not a complete ban in the long term. But that being said, sweeping actions such as these remind us why we're supporting and invested in a decentralized space. Banning all ads, despite the stated intentions, is a form of censorship. Yes, the search platform of Google and the social media platform of Facebook are theirs to police as they wish, but that's why we need an alternative and decentralized space where no one has the power to police thought and expression, a true and open internet. I, for one, would much rather have an ecosystem that has decentralized autonomous organizations all competing for my business fairly, rather than a Google being the sole arbitrator of who can and cannot advertise to me. Let people decide what is and is not reputable, not a monopoly. Speaking of monopolies, Coinbase, which is not a monopoly but close, has been granted an e-money license by the UK regulator, the Financial Conduct Authority. What this essentially means is that Coinbase is now able to issue e-money and provide payment services in the UK, and will have passed additional checks in terms of things like segregation of client funds, which means that customer fiat balances are separated from Coinbase's own operational funds and kept in separate bank accounts. In related news, a Goldman Sachs-backed payment platform which acquired Poloniex last month is launching Circle Invest in the US. The app is now available in the App Store and the Play Store and lets you instantly trade the most popular cryptocurrencies without any fee. This is exactly what we predicted when Circle acquired Poloniex last month. Circle and Goldman are looking to disrupt Coinbase's hold on the industry. Lastly today, EOS, which some people refer to as the Linux of blockchains, was recently in the spotlight for their less than ideal spokesman, Brock Pierce. Pierce was notorious for outlandish claims and was called out for them on John Oliver's segment earlier this week. In a move that confirmed Oliver's criticisms, Pierce was let go from the EOS project this week. We're still skeptical if this is truly going to be the Ethereum killer crypto or not, but they're going to be releasing their product this summer, so we'll see if their year-long ICO and claims are going to be worth it. So with that, I'll turn it over to Doc. Have a great day.
Good evening, folks. Doc here for ReadySetCrypto, looking at Bitcoin again. I probably don't really need to look at anything else but Bitcoin because across the board we're seeing carnage, we're seeing Ethereum losing out trend lines, we're seeing Ripple and Bitcoin Cash, and just about everything is throwing off red candles today. Blood in the streets when it comes to crypto, but that in some ways is exactly what we need right now, believe it or not. I know it doesn't seem like it. I know every time I say something like that, like I want to see red candles and things like that, you guys probably cringe, and I don't blame you. But after being through many bear markets in my lifetime, what we have to find is a point where people basically give up and say, that's it. I can't do this anymore. And what you find is that that decision point tends to be a very common one. It tends to be a very common one because most people are getting their information from the same place, from the same pages, from the same media sites. And so everybody kind of collectively comes up with the same decision at once. And this is typically when you see capitulation. Now, remember what I've talked about, not only in these pages here with my daily reports, but also the bear market webinar that we did, is that the 4 stages of a market rally as you go from euphoria to disgust, and eventually disgust has to come to the point where everybody is just completely disgusted with the market. They think that there's absolutely no hope. And from disgust comes disbelief. If the market rallied, if Bitcoin rallied tomorrow and went up, would that surprise you? Or would you just say, oh, well, there you go. There's a There's a higher low, and good, it's rallying. So ask yourself that question, because what we have to get to is almost a point. And again, this is what I found with every single bear market that I've gone through, is when you do see the rally, you're not just in disbelief, but you're amazed. In fact, you're so skeptical that you just assume that it's going to turn around and head back down again. And that's the level of disbelief that we need to get to on Bitcoin. And so once we start seeing every news article being negative, when today is really not a bad poster child for a day like that, because as I look out there, we're seeing news like Google is no longer accepting ads for crypto. So piling on top of Facebook for just a couple of weeks ago. So this is, I think, one of the big reasons why we're seeing the big red candle here. So I see a day like today where we're down 10%, and I'm thinking to myself, good, because let's rip the Band-Aid off. Let's get it over with. Let's see some real volume here. We're starting to build up with real volume. Not quite at the previous bottom yet, not quite at the previous bottoms that we've had. Right, so we'll typically see some really, really spiky volume behavior when we do get to those. So let's go back and look at a couple of these. This is kind of what we're looking at here, is that's the type of volume that we really want at those bottoms. That's the type of volume. That's the type of volume that we want from these bottoms. All right, this kind of volume out there. Now back to today, the one saving grace that I will say that this market is showing right now is, as we look at the Fib retracements, or Fibonacci retracements, typically we'll see a bounce at 38.2. Okay, that was the initial bounce off of here, was at 38.2, and led us to believe that this ended up being a bull trap. This is a bull trap, right? All those people that went long off of here are now underwater and are wondering what to do. We can see the price bounce at 50%, which is what it did during the flag, and I'll bring up the flag here. And now today is threatening to break below 61.8. Typically what happens is when you see it close below 61.8, and we've got about 40 minutes to go before the day rolls over here. Once we break that on a closing basis of 61.8, then typically what we do see is the probabilities have increased for the triangle to be filled in. And when I'm saying the triangle here, I'm talking about this is the triangle. There's the triangle right there. So back to 6,000 we go, perhaps. Now, a lot of you were asking me about the bear flag that I saw the other day. And let's go back out to here. And let's zoom in a little bit and see if we can expand this a little bit. You can see the bear flag. If you kind of ignore the pink lines here with the Bollinger Bands, you can see that we had a slightly rising pattern with higher highs and higher lows all along here. So again, when you see a pattern like this, it will give people the impression that, oh, look at this, we're rallying up again. And you start to see green candles on the daily chart. But if this was a true reversal, what I would expect to see is not only huge volume, but also really just expansive moves to the upside. We are not seeing those in this type of move. So this ends up being a flag pattern. And flag patterns, eventually what will happen is a lower high sets up here, and then it pierces the lower neckline of the flag pattern. Now, what we can also do is go out to the daily chart again, and the daily chart, a flag pattern typically will show kind of a halfway house in the midst of a move down. So we get the initial move down, which was from 11 and change down to about 8,500. So that's about a 3,000 point move. We flag out here, and then the next move will be approximately 3,000 points. And that's from just below, I'd say 9,500 to, so that's kind of targeting, again, that 6,000 level once again. So that bear flag ends up being a halfway house in the midst of a larger swing. So there it is, guys. I wish I had something positive to report, but we just have to call them out as we see them and not call it out based on what we want to happen. So once we start to call it out based on what we want to see happen, that's where our bias is getting in the way and preventing us from making objective decisions. Okay, guys, thanks for listening. Hope you have a great evening. We'll see you tomorrow. Take care.